basics in the modern world, I will be discussing cryptocurrency, specifically Bitcoin, and why consider it. So let's start off by discussing the following words. Cryptocurrency. So it's mainly composed of two words. It is crypto and currency. Crypto is defined as hidden, secret, or not perceived immediately or with certainty. On the other hand, currency is a medium of exchange for goods and services. So when you put them together, you get cryptocurrency. So what is cryptocurrency? Cryptocurrency is a digital or virtual currency that is secured by cryptography. So a cryptocurrency is a new form of digital asset based on a network that is distributed across large numbers of computers. This decentralized structure allows them to exist outside the control of governments and central authorities. Now that we have established the two basic words that composes cryptocurrency, let us now move on to its history. How did it start? How did cryptocurrency emerge from nothing into something? So in 1998 to 2009, this is the pre-Bitcoin years. Although Bitcoin was the first established cryptocurrency, there had been previous attempts at creating online currencies with ledgers secured by encryption. So two examples of these were B-Money and BitGold, which were formulated but never fully developed. Next up is in 2008. So in 2008, a milestone happened. So a paper collection, Bitcoin, a peer-to-peer electronic cash system, was posted to a mailing list discussion on cryptography. It was posted by someone calling themselves Satoshi Nakamoto, whose real identity remains to be a mystery up to this day. So in 2008, it was established by a pseudonymous man or woman named Satoshi Nakamoto. And in 2009, this marks the beginning of Bitcoin. So the Bitcoin software is made available to the public for the first time and mining. The process through which Bitcoins are created and transactions recorded and verified on the blockchain begins. So it is the start of a new era for cryptocurrencies. And in 2010, Bitcoin is valued for the first time. As it had never been traded, only mined, it was impossible to assign monetary value to the units of the emerging cryptocurrency. And in 2010, someone decided to sell theirs for the first time, swapping 10,000 of bitcoins for two pizzas. So imagine 10,000 bitcoins for just two pieces of pizza. So if the buyer had thought of something else and hung on to those bitcoins, at today's prices, they would be worth more than $100 million. So moving on, we move on to the next year, which is 2011, in which rival cryptocurrencies emerge. So as Bitcoin increases in popularity, and the idea of decentralized and encrypted currencies catch on, the first alternative cryptocurrency appeared. And these are sometimes known as altcoins. So altcoins they generally try to improve on the original Bitcoin design by offering greater speed, anonymity, or some other advantages. Among the first to emerge were Namecoin and Litecoin. Currently, there are over 1,000 cryptocurrencies in the circulation, with new ones frequently appearing in the market. So after 2011, we move on to 2013, which is known as the downfall of the Bitcoin price. So Bitcoin prices start to crash. So shortly after the price of one Bitcoin reaches $1,000 for the first time, the price quickly begins to decline. Many who invested money at this point will have suffered losses as the price plummeted to around 300. It would be more than 2 years before it reached $1,000 again. So imagine you have $1,000 and you invested it in Bitcoin and then it declined to $300. You'll really feel like your investing has failed. And after that, in 2014, scams and thefts in Bitcoin began. Perhaps unsurprisingly, for a currency designed with anonymity and lack of control in mind, Bitcoin has proven to be attractive and lucrative target for criminals. In January 2014, the world's largest Bitcoin exchange, Mt. Gox, went offline, and the owners of 850,000 Bitcoins never saw them again. Investigations are still trying to get to the bottom of what exactly happened in Mt. Gox. But whatever the story, someone dishonestly got their hands on a haul, which at that time was valued at $450 million. At today's prices, those missing coins would be worth $4.4 billion. And it was then followed in 2016 by the emerging markets like Ethereum and ICOs. So one cryptocurrency came close to stealing Bitcoin's thunder this year, as enthusiasm grew around the Ethereum platform. This platform uses cryptocurrency known as Ether to facilitate blockchain-based smart contracts and apps. So Ethereum's arrival was marked by the emergence of initial coin offerings, which are ICOs. These are fundraising platforms which offer investors the chance to trade what are often essentially stocks or shares in startup ventures in the same manner that they can invest and trade cryptocurrencies. In the US, the SEC warned investors that due to the lack of oversight in ICOs, this could easily be scams or Ponzi schemes disguised as legitimate investments. And the Chinese government went on even further and banned them outright. But after those downfalls, it is then followed by the Bitcoin's peak in 2017. So in 2017, Bitcoin reaches $10,000 and continues to grow. A gradual increase in the places where Bitcoin could be spent contributed to this. During the period where its value remained below previous peaks. So gradually, as more and more uses emerged, it became clear that more money was flowing into the Bitcoin and cryptocoin ecosystem. During this period, the market cap of all cryptocoins rose from $11 billion to its current height of over $300 billion. Banks, including Barclays, Citibank, Deutsche Bank, and BNP Paribas, have said they are investigating ways that they might be able to work with Bitcoin. They work together. Meanwhile, the technology behind Bitcoin, which is blockchain, has sparked a revolution in the fintech industry, which is only getting started. So, what is Bitcoin today? So, how much is Bitcoin priced today? So, according to statistics and to recent graphs, Bitcoin is equivalent to 1,789,168.59 pesos, and they fluctuate over time. The last time I checked, it was only at 1,714,000, but now it is 1,789,168.59 Philippine pesos. So that really is something that impacts your view of Bitcoin. But before we delve deeper, let us first know what is Bitcoin. So, Bitcoin is a new currency that was created in 2009 by an unknown person using the alias of Satoshi Nakamoto. Transactions are made with no middleman, meaning no banks were involved. The price of Bitcoin skyrocketed to thousands in 2017. Bitcoin is often described as a cryptocurrency, a virtual currency, or a digital currency, which is a type of money that is completely virtual. It's like an online version of cash. So despite it not being a legal tender or a legal mode of payment in a country or a government, Bitcoin charts high on popularity and has triggered the launch of hundreds of other virtual currencies, collectively referred to as altcoins. So, now that we have discussed the basics of Bitcoin, let us know, how does it work? So, how does Bitcoin work essentially? So, first, it is a peer-to-peer technology. It uses peer-to-peer technology. So, Bitcoin is one of the first digital currencies to use peer-to-peer technology to facilitate instant payments. So, the independent individuals and companies who own the governing computing power and participate in the Bitcoin network are comprised of nodes or miners. So, what are miners? Miners are people who process transactions on the blockchain and are motivated by rewards, or the rewards are the release of new bitcoins, and then transaction fees paid in bitcoin. So these miners can be thought of as the decentralized authority enforcing the credibility of the bitcoin network. So the miners are what we call the decentralized authority. So, new Bitcoin is being released to the miners at a fixed but periodically declining rate, such that the total supply of Bitcoins approaches 21 million. So, basically, each Bitcoin is a computer file stored in a digital wallet app on a smartphone or computer, and people can send bitcoins or part of one to your digital wallet, and vice versa, you can also send bitcoins to another person. So people can send bitcoins, and every single transaction is recorded in a public list called the blockchain. So this is the blockchain. It's the list of all the transactions that occurred in bitcoins. So this makes it possible to trace the history of bitcoins to stop people from spending coins that they do not own, or to make copies or undo transactions. So there are no physical bitcoins, only balances kept on a public ledger that everyone has transparent access to. That, along with all bitcoin transactions, is verified by a massive amount of computing power. So now that you know the basics and you know how Bitcoin works, let us know what mathematics is involved. Like, how can we relate it to our course? So, as you all know, mathematics gives solutions to real-world problems. Like any other solutions, Bitcoin was used to revitalize the economy after its crash in 2008. So in this course, we discuss cryptography, which is a method of protecting information and communication through the use of code, so that only those for whom the information is intended can read and process it. So cryptography is an integral part of Bitcoins, and you will learn why. Bitcoin essentially uses something called elliptic curve cryptography to ensure the security of transactions between owners of bitcoins. So elliptic curve cryptography is a type of a public key cryptography relying on mathematics to ensure that a transaction can be secure. So ECDSA is short for elliptic curve digital signature algorithm. It's a process that uses elliptic curve and finite field to sign data in such a way that third parties can verify the authenticity of the signature, while the signer retains the exclusive ability to create that signature. So with Bitcoin, the data that is signed is the transaction that transfers ownership. So let us know the basics of an elliptic curve. So an elliptic curve is represented algebraically as an equation of the form y squared is equals to x cubed plus ax plus b. So as you can see, if you use that equation and plot a is equals to 0 and b is equals to 7, it will look like this. This graph right here. It will look like that. And when you use point addition, which is represented by p plus q equals r, which is defined as the reflection through the x-axis of the third intersecting point, R prime, on the line that includes PQ, it's the easiest to understand using this diagram right here. So this diagram represents point addition. Moving on, we have now point doubling right here. Point doubling is represented by the equation P plus P equals R. Is defined by finding the tangent to the point to be doubled, which is P, and taking its reflection to the x-axis of the intersection point R prime on the curve to get R. Here's an example of what it would look like. So right here is an example of point doubling. P plus P equals R. So now that we know the elliptic curve, let us now move on to finite fields. So the EEC-DSA uses elliptic curve in the context of a finite field, which greatly changes their appearance but not their underlying equations or special properties. So the same equation plotted above in a finite field of modulo 67 will look like this. So this is the plot appearance of modulo 67 using the curve equation showed previously. So as you can see, if you divide it in the middle right here at this portion and you fold it, it is just a reflection of the above and the below. So this area here is the same as this one. It is just mirrored. Point addition and doubling are now slightly different visually. So lines drawn on this graph will wrap around the horizontal and vertical directions. Just like the game of asteroids, maintaining the same slope. So adding points 222 and 625 will eventually look like this graph right here. The graph there used point addition. So let's go back to Bitcoins. A protocol such as Bitcoin selects a set of parameters for the elliptic curve in its finite field representation that is fixed for all users of the protocol. The parameters include the equations used, the prime modulo of the field, and the base point that falls on the curve. So the order of base point, which is not independently selected but is a function of other parameters, can be thought of graphically as the number of times the point can be added to itself until its slope is infinite, or a vertical line. The base point is selected such that the order is a large prime number. So Bitcoin uses very large numbers for its base point, the prime modulo, and order. In fact, all practical applications of ECDSA use enormous values. The security of the algorithm relies on these values being large, and therefore impractical to brute force or reverse engineer is impossible. Okay, now let's move on to how can you start investing in Bitcoins now that you know the basics. As you all know, Bitcoin is a highly volatile investing asset that can be used for transactions where merchants accept it. So after learning the basics, it boils down to the question, could you and should you invest in Bitcoin? Yes, you can, but are you up for the challenge? You must initially learn the various types of ways you can invest in Bitcoin, strategies you can use, and the dangers involved in cryptocurrency. So now I'll be discussing the investment types possible when you invest in Bitcoin. Over the past decade, multiple ways to invest in Bitcoin has popped up, including Bitcoin Trust and exchange-traded funds comprised of Bitcoin-related companies. But these are the four major types of investment, starting off with buying standalone Bitcoin. So, the first way you can invest in Bitcoin is by purchasing a coin or a fraction of a coin via trading apps like Coinbase. In most cases, you'll need to provide personal information to set up an account, then deposit money you'll use to purchase a Bitcoin. Next, you could also use GBTC or Grayscale's Bitcoin Investment Trust. So, investors looking to invest in Bitcoin through the capital markets can access an investment through GBTC. Using Grayscale provides certain advantages that makes an investment in Bitcoin a more digestible option. For one, shares of GBTC are eligible to be held in certain IRA, Roth IRA, and other brokerage and investor accounts, allowing easy access for all levels of investors in a wide variety of accounts. So, in reality, investors are paying for security, ease of use, and liquidity by arranging strong offline storage mechanisms. GBTC allows investors who are less technical to access the Bitcoin market safely. Alright, up next is Block. So, amplify transformational data sharing exchange traded fund. So, Block is an actively managed fund that has holdings in 15 different industries and is traded on the New York Stock Exchange ARCA. The company invests in other companies that are involved with developing blockchain technologies. Block's net expense ratio is at 0.70%. And lastly, we have Bitwise 10 Private Index Fund. So, the Bitwise 10 Private Index Fund is based on Bitwise 10 Large Cap Crypto Index, a basket of large capacity coins in which the company tries to provide security and the ease of use of traditional exchange traded funds, ETFs. Okay, now I will be discussing strategies you must know before you invest. So, Bitcoin as an investment have three major strategies. Starting off with buy and hold. Hold is intentionally misspelled. So, hold is a term used in the Bitcoin investment community for holding Bitcoin. It has also turned into a backronym, where an acronym is made from an existing word. And it means hold on for dear life. So, an investor that is holding their Bitcoin is holding or is a holder, but spelled with DL. Many people invest in Bitcoin simply by purchasing and holding the cryptocurrency. These are the people that believe in Bitcoin's long-term prosperity and see any volatility in the short term as little more than a blip on the long journey towards high value. Up next is long positions on Bitcoin. So some investors want a more immediate return by purchasing Bitcoin and selling it at the end of a price rally. There are several ways to do this, including relying on the cryptocurrency's volatility for high rate of return should the market move in your favor. So several Bitcoin trading sites also now exist that provide leverage trading, in which that trading site effectively lends you money to hopefully increase your return. And lastly, we also have short positions in Bitcoin. So some investors might be on Bitcoin's value decreasing, especially during a Bitcoin bubble. A Bitcoin bubble is a rapid rise and the price is followed by a rapid decrease. Investors sell their Bitcoin at a certain price, then try to buy it back at a lower price. So, for example, if you bought a Bitcoin worth $100, you would sell it for $100 and then wait for the Bitcoin to decrease in value. And assuming the buyer of that Bitcoin wanted to sell, you could buy it back at a lower price, maybe 80 or 70. You make profit on the difference between selling price and your lower purchase price. It can be difficult to find a platform for short selling, but the Chicago Mercantile Exchange is currently offering options for Bitcoin futures. Now that we have established the different investment types and the strategies you must know before you invest, the question is why is now better than tomorrow in terms of investing? Why is now better? Here are some advantages of Bitcoin. So, as we all know, Bitcoin has some drawbacks, but these drawbacks aren't prohibitive. However, it is extremely important that you know what you're doing and that you don't invest more than you can afford to lose. Just like any other investment, you should know the risks of the amount that you would invest. It is considered a very, very high risk investment, meaning that it should represent a relatively small part of your investment portfolio. The overwhelming performance of Bitcoin as a currency and investment has attracted traditional and institutional investors alike. Bitcoin as an investment tool provides you with the following advantages over traditional investments. Alright, starting off with liquidity. So, liquidity. Bitcoin is arguably one of the most liquid investment assets due to the worldwide establishment of trading platforms, exchanges, and online brokerage. You can easily trade Bitcoin for cash or assets like gold instantly with incredibly low fees. The high liquidity associated with Bitcoin makes it a great investment vessel if you're looking for short-term profit. Digital currencies may also be a long-term investment due to their high market demand. And another advantage is lower inflation risk, since we have already established that Bitcoin is not ruled over by any government or country. Then it has lower risk on inflation. Unlike world currencies, which are regulated by their governments, Bitcoin is immune to inflation. The blockchain system is infinite, and there's no need to worry about your cryptos losing their values. Next up is new opportunities. Bitcoin and cryptocurrency trading is relatively young. New coins are becoming mainstream on a daily basis. This newness brings unpredictable swings in price and volatility, which may create opportunities for massive gains. And lastly, it is a minimalistic trading. Stock trading requires you to hold a certificate or a license, perhaps. You must also go through a broker to trade a company's shares, but Bitcoin trading is minimalistic. Simply buy or sell Bitcoin from exchanges and place them in your wallet. Bitcoin transactions are also instant, unlike the settlement of stock trading orders, which could take days or weeks. So I suggest that you learn more about Bitcoins, you read the history, read news about Bitcoins, and learn more. First, because it's still early, and Bitcoin stands to capture the value from a spectrum of large and diverse markets. Its value today is only a tiny fraction of the markets it stands to disrupt, which reach well into trillions and trillions, I say trillions of dollars. What if Bitcoin takes even a quarter of store value market held by gold? What if it becomes the currency choice for few of the more unstable nations plagued by hyperinflation? Or what if it becomes one of the most popular currencies for mobile payments? These are just a simple few possible use cases. So next is the generational shift in wealth. So with an estimated $68 trillion in generational wealth changing hands over the next 25 years, we may see more investment dollars make their way into the uncorrelated assets like Bitcoin. A recent survey from Blockchain Capital shows millennials are much more likely to buy, hold, and use Bitcoin, the majority which have not even hit their prime earning age yet. As a generation is evaluating where and how to invest their money, Bitcoin is increasingly part of the mix. Third, network fundamentals are strong. Through a global transaction network, Bitcoins can be sent securely across borders in any amount at low cost, as seemingly as a text message, and without the need for a trusted third party. Over 100,000 merchants worldwide are now accepting Bitcoins, and the number of active wallet addresses on Bitcoin network continues to grow. It's a key sign of a vibrant and growing financial ecosystem. While the methods for sending, receiving, and storing Bitcoins continue to improve at both the consumer and institutional levels. And lastly, diversification is a rewarding strategy. Stocks and bonds don't seem to be going away, but investing in digital currencies like Bitcoin may help investors build even more diversified portfolios with higher returns per unit of risk. Bitcoin has historically performed as an uncorrelated asset, meaning it does not necessarily move with stock or bond markets. As a result, it may provide benefits to an investment portfolio that previous generations of investors could only have dreamed of. So I suggest you learn the basics of Bitcoin and start now. I hope you learned something from our Bitcoin or cryptocurrency discussion. But before anything else, I would like to thank these references for giving me reliable information and sources with my discussion in cryptocurrency. And I hope you enjoyed my discussion and learn more about Bitcoin. Again, learn the basics and start now. Thank you, and this has been Shane Arguelles.